Welcome to another session in accounting and personal finance. We're going to be looking at an article on BBC about Tesla and the share price and how it has appreciated in recent times. And we're going to drill into the fundamentals of this company and compare it with others in the industry. So by the end of the session, we'll be able to have an understanding of the accounting principle and evaluate Tesla and compare its rivals. We are going to look at analyzing the income statement of Tesla. We're going to analyze the balance sheet of Tesla. We're going to analyze the share price, and we're going to compare the profits of rival to look at the findings. Now, let's look at the income statement of Tesla. Now, we're able to get information for 2018 and 2017. So 2019 was not available. But we can see here that revenue in 2018 was 21 billion. And the cost of sale is 17.42 billion. And realize that it's 81%. So its cost of sale is quite high. So it's 81%. And that was in 2018. In terms of its gross profits, about 4 billion. Operating costs is quite high, it's way above its gross profit of 4.42, and so therefore it has 20.60 percentage of gross profit of operating costs. Now, if we were to adjust that, because it's quite high, or it's higher than 100%, so therefore in real terms its percentage is about 18%. Its operating income is negative 380 billion approximately, and its net income is 0.98 billion. Okay, so it's basically have a net loss of about 4% or 4.5%. And now in 2017 we see 11 billion in sales. So the previous year was 11 billion in sales, 9.54 in costs, and again hovering around the 81%. Its gross profit is about 2.22, and operating expense is 3.85 billion. Again, 32% in terms of its operating costs, which is about 18.8 if we adjust because it's over 100. And it has a negative 16.6% in terms of net income. In terms of the balance sheet, we're trying to appraise the balance sheet. Its total asset is let's just look at 2017 as opposed to 2018 first. Let's look at 2017. In 2017 is 28.66 billion, and it has cash of about 3.52 billion. Its total liability is 24, so it's 85.21%. So it's quite high in proportion to the total asset. Is a significant amount of it, almost 90%, or hovering, well, it's 85%, it's going towards 90 of it is debt, so it's heavy debt, and its capital is 4.24 billion, which is about 14%. And in 2018 it's 29.74 in terms of assets, and 3.87 rather in terms of cash. And in terms of its liabilities, 24.82, which is 83.46%. And in capital, we have 4.92, which is about 16.54%. So we see here again, its liabilities is going down, so it's paying debt. It's paying down the debt, but it's still quite significant. Now, in terms of its share price, its share price in 2017 is 311, and then it went to 332, then it went to 418, and currently it is 887. Now, I'm just wondering what's driving the appreciation of the share price, because it has two periods of losses, or two reported years of losses, but it's seemingly driven by expectation. So is that market forces that's driving it? And is this speculation maybe a negative in a way, but we never know. So this company, seemingly its share price is driven solely or heavily on expectation. It has increased over the period. If you will look at the net income, it has increased over the period by 146%. Yeah. Now let's look at its rivals, because I think it is important for us to compare its rivals to get a better idea of what is happening here. So let's look at the market leader, which is Toyota. They have 273 billion in sales, and 800, which if we're to look at a percentage, their cost of sale is about 81%, and their gross profit is about 18%, and their net income is 6.23. And for Volkswagen, it's 247 billion. Their cost of sales about 80, their gross profit about 6.9, and their net income is 5.39. And then in terms of GM, it's 147, cost of sales of 90.41, and its gross profit is 9.59, and net income of 5.45%. Now Tesla, on the contrary, has sales of 21 billion and cost of sale of 81.17%, and gross profit of 18, which we have adjusted, and it is a negative net income. Now, if you see that the sales on average is 100, over 100, 150, nearly 300 for Toyota and 150 for GM, and Tesla's sales is just 21 billion, but yet still it's rivaling asset value while having such lower sales. I mean, mind you, this company is young compared to the other. They've been around for over 50 years, and this company has just been around for maybe about 5-10 years or thereabouts. It's in the 10-year region, and so it's young compared. But I think it has to be very careful of driving growth of its value far greater than its reality. Now let's look at the market capitalization of Toyota, which is 230, Volkswagen is 89, and GM is 49. But Tesla is in the second position of 102. But I'm just wondering, why is it in 102 in terms of valuation? Well, its sales is low and it's not making a profit. It's still a bit funny to me. And in terms of the share price, we have the leader, which is Toyota. Its share price is 141, Volkswagen is 169, and that's in euros, and then GM is 34, but Tesla is 887.06. It's 77.77 times the average of the others. So it's highly high price. The price for it is quite high. It's 7.7 times higher than its rivals. And in terms of net income, all of its rivals are making a profit. So the first, Toyota is making about 17 billion in profit, Volkswagen is 13 billion, and that's in euros, and 8 billion for GM. But Tesla is not making a profit. And so again, that creates a bit of a situation where it might be running ahead of itself. There might be a justification for the valuation, but it needs to correct itself before it overvalues, and that could create problems in the long term, because again, it doesn't have a lot of cash and it has a lot of debt, and so therefore that could be a negative. So in conclusion, we've looked at the income statement, we've looked at the balance sheet of Tesla and the share price, and we've compared the profits of the rival. I hope that you've learned something from this in terms of investing. So my belief on this company, it's not necessarily wise to, if you are a risk averse investor, it's not a wise investment. But if you are someone who has a significant risk appetite, you can invest, and hopefully as profits come in the future and they correct the inefficiencies, that you'll be able to recoup your investment, but it's a bit of a risky one. I do not think this company is able to cope with shocks, because if it has a high valuation and it's driven by market forces, if there's negativity or negative press in any way, its share price will fall, and that could easily wipe out a lot of value. And because the core value in the balance sheet is driven mainly by speculation, so, and again in the balance sheet it has a lot of debt. So I would say a risky one for me, but I mean, it's up to you what you believe. So thank you for listening, and look out for our next video and subscribe.